Ecolab is a global company that provides water, hygiene, and energy technologies and services.
Right, so we're starting with one which is US-based, as we typically do, to set the scene. Now, this is a company that, as Bronwyn says, is involved with all sorts of services. It's got a very big division, though, that's involved with the oil and gas industry, and particularly cleaning the water that comes up and down of those fracking wells in the Texas oil fields.
It may have been hit by the recent fallout in the oil industry. Market cap here, $34.2 billion, trades on a PE of 36.8 and a dividend yield here of 1.2%. Have you surveyed Ecolab previously?
No, not really. So when I had a look at this company, it was actually quite interesting, and that oil and gas story really stood out for me because these guys are helping the oil and gas industry basically be a little bit more sustainable.
Yes.
And being a little bit less onerous on the environment. It's about 30% of their revenue stream. The rest of it is a variety of other industries. These guys do water treatment and chemical treatment in forestry, in healthcare, in food services. They're just about everywhere in 170 countries to be exact.
So definitely size on the platform here.
Sure.
Let's look at the share price performance.
Yeah, and it looks good. It looks good. So that's a 5-year chart, and its all-time high is $124, and it's trading at 117. So you can see they're doing well. They're obviously being kept busy by rising regulations. Now, for example, in most countries in the world, you can't simply run a restaurant and have the back of the place where the food is being prepared look like nothing on earth. You've got to maintain certain standards. You've got regular inspections. You've got to check for pests. You've got to get people in on a regular basis to do a so-called deep clean, and these are the sort of people that do this. You'll see them across the world.
But relatively expensive at a 36 PE.
Yes, and even if you look at it on a forward basis, I think it's on a 29 times forward PE, and the expectation for earnings growth isn't that great at the moment. So what you have with this company is you've got a really nice annuity income stream because you can't stop cleaning your restaurant kitchen. Regulations won't allow you to do it. But when economic growth is sluggish, new business begins to falter a little bit, and this company really is exposed to losing out on new business because of sluggish economic growth.
But if you were to bet on the future and the fact that environmental concerns are going to become more and more of a element to take into consideration while operating a business, this is well placed.
Yeah, and of course it also falls into the sort of outsourcing trend where many companies don't necessarily want to internalize the capability to do disaster and waste management cleanup in the event of an oil spill or something like that. They don't necessarily, if they're running like government hospitals, they don't necessarily want to have a team that does this kind of thing. So they quite like the idea that they've got someone who comes in on a quarterly basis and does some specific value add type services, and then you have the ongoing work.
It's a type of company, notwithstanding its size, but that would fit very neatly into the Bidvest fold. It sounds as though something that Bidvest would take on.
Well, it's the other way around. You probably find Ecolab is the kind of company that wants to come shopping and buy out Bidvest because they could in one fell swoop get Steiner.
That's why I
and all
made the
other
point
stuff.
about size, but it kind of is in that space.
Yeah, I was actually thinking about it as well when I looked at the company this morning. They really do like this end-to-end solution story for their customers, more or less the same way that Bidvest Services does it. So you almost can't get rid of them because they are doing the cleaning of your hospital, they're doing the cleaning of your medical waste, they are doing your theatre,
even servicing
sanitation.
some of your complex machinery.
So they've got what you would call a sticky relationship with their clients.
Absolutely.
Hot or not, Chantal?
So if it wasn't for the valuation, it would have probably been a hot. So it'll have to be a not for me. It just looks very expensive.
Paul?
One final piece of information is that Bill Gates, in his personal investment fund, using the proceeds of sold Microsoft shares, because he's trying to diversify, owns nearly 11% of this company.
Do you want to change your mind? Are you sure? You're still going not hot?
I don't know when he bought them, when the PE was cheaper.
And does that swing you into a hot
I'm
on
going to
this
tip
one?
it hot because I've seen the business
Because
in
of Bill
place.
Gates.
And also we've got one environmental warrior in our client base who did some investigative research herself and bought this one in our New York operation. So I'm going to go with hot on that basis.